What's going on, guys? Welcome back to the channel. In this video here, we're doing an analysis on Intel. Now, they recently reported earnings and it hasn't been too hot. They've missed their earnings per share mark by quite a lot. Now, I'm a fan of this company and I'm going to explain why I'm a fan of this business and why this earnings per share debacle doesn't really bother me too much. When the first point is that with Intel, they are run by, I have complete faith in Pat Gelsinger. I believe he's such a strong CEO and he's very transparent of where this company currently stands. And as well as having it loaded up in my stock research tool here, folks, we are ranking it a fairly high number when at 9 out of 10. Now, what this software does, it takes a look at their cash flow statements, the income statements, as well as the balance sheets, and grades it out of 10. We're scoring Intel a 9 out of 10. We're going to take a look at the company metrics, which compares the 5-year average metrics of the company and compares it to the trailing 12 months to see how it's been doing, as well as we will do a price analysis to find the intrinsic value of this business. Pat Gelsinger has been transparent about this business and saying, and pretty much laying out the path of where this company is currently going, of how they're making their foundries and their manufacturing and where they're currently are lying, and they are doing a huge fundamental shift in the culture of the business, and that's where I have my complete faith in this company, because at the end of the day, folks, it's how the CEOs and how the business is run which is going to dictate a lot, as well as having great financials on hand. Strong leadership is extremely important. It got hit pretty hard from this news. The price has gone down to $36 a share, and over the last little while in the 52-week range, it's been on a decrease. So for me as a long-term investor, I am loving this because I'm able to pick up shares at a much more cheaper price. So, and full disclosure, I have a position in Intel. But let's take a look at this, folks. So with Intel, our 5-year average PE ratio is 14. We're currently at 7. We are pretty much up on our EPS by a small amount for our trailing 12 months. Our ROE is pretty much very comparable, 19 compared to 23 on average. Profit margin, same thing, 26 to 25. Revenue is $73 billion with a 19 in net income. Our free cash flow is currently down in the negative $152 million range, because they are opening up their foundries and they're using their free cash flow to reinvest back into themselves. We pay out a dividend at 3.93%, which it works out to be $5.6 billion being paid out. And our average free cash flow is $14 billion. And they can easily cover that, folks. They can easily cover the dividend, no problem. They have a pretty decent return on invested capital and a decent Altman Z-score being over 3 and a decent Piotrowski score sitting at 7. So those are the numerics over there. We want to see this number between 7 and 9, and they have it. In our financial evaluations, as I was explaining, that this looks at the company's income statements, cash flow statements, and balance sheets. Everything is green across the board, minus our free cash flow. And the reason why is because they are reinvesting back into themselves. As I explained, they are putting up a plant in Ohio and to manufacture more chips to meet the demand. But look at these numerics, guys. We have a low debt to equity. We have EPS growth is up. ROE is high. Current ratio is above 1.5. That means they have enough assets on hand to cover their liabilities. A decent PE ratio sitting at 14. They're buying back shares at 3% over the last 5 years, which is great. And net income is up. Our 5-year return on invested capital average is 17%, which is high. And our revenue growth is up as well. So there's a lot of things to look forward to in Intel. Now, granted, am I happy about this EPS mishap? No, but you know what? That's one quarter that it was a little bit of a misstep. And I believe this dramatic decrease in price in the Friday that just passed is a little bit over-exaggerated. But for me, as a long-term investor, I love moments like this because I'm able to capitalize for my long-term outlook on people's fear and panic. And this is what you should be doing too, folks. Use the news as a metric to try to jump in on when people are being fearful. So with that, we're going to jump into a price analysis of Intel. So what I'm going to do here on my software is I'm going to fill in these boxes. We're going to do a 10-year analysis and we're going to find out what we should be paying for this business. So I'm going to fill out these boxes, and I'll touch base with you in just a quick second. Before we jump back into the video for the price analysis, if you're liking the video so far and you want to get your hands on this software, hit that like button, hit that subscribe button. This software is coming out as soon as it can get out to you. We're working diligently to make it available to my viewers and subscribers. So with this, we're going to go to the stock research tool here and take a look. If you're new to the channel, here's what I like to do. For our revenue, I like to try to stay as conservative as possible, going 2%, 3%, and 4% over the next 10 years. Granted, we've seen a 5% revenue growth over the last 5 years, so it only makes sense to give ourselves somewhat of a discount given the size of the business. Now, with our profit margin, I stuck to a similar profit margin. Same thing with our free cash flow margin. Our price to free cash flow, we are showing a negative number because currently it is in the negatives, right? So with that, I'm gonna go based off what I've done before and do 10, 12, and 14, keeping it under 20, as well as our PE ratio, doing 7, 7.5, and 9. Very reasonable. I'm gonna click calculate, and we're gonna find out what the intrinsic value of Intel would be today. These are very conservative numbers. I don't think I've ever gone this low on the PE ratio, but this overall price decrease is it's interesting. So here, let me show you what's going on. Take a look at this, guys. Current price is currently $36.31. Our average calculation comes out to be $44.26. That it checks out with our moderate average. And look, on our conservative side here, folks, $34.31. Pretty much almost trading at fair value given the similar PE ratio, similar price to free cash flow, and only assuming a 2% revenue growth over the next 10 years. Guys, that is extremely low, and this is why I like Intel. Even if the company grows at a slow percentage point at 2%, I trust Pat Gelsinger, and he's going to make the right decisions based off the cash on hand and the financial status of the business. They make great products. Everyone knows the Intel name, and I believe his transparency and leadership is going to carry this company forward. They are hitting a rough patch right now, and I believe that will pass. Now, look, there's a possibility that I could be wrong, but here's the thing, folks. This is why I love my software. And it gives me the option to look and give myself the most margin of safety as possible. So take a look at that. At 34, 2%, I'm not assuming 5% over the next 10 years. Or 4%. I'm giving myself 2% revenue growth, even with a haircut on profit margin, a haircut on free cash flow margin, and a desired return of 13%. We're pretty much almost there, hitting the DCF at $43 here, folks. So if you believe these numbers, pretty much Intel is a buy. That overreaction that we're seeing from the market, just chopping up this company, and I love it because you know what? Wall Street hates Intel for whatever reason. So you know what? We're buying a great business at a great price. So I'm going to continue doing that. But that's just my opinion. Ultimately, you have to do your own due diligence and do your own process. And this software here helps me do that, and it will be available to you. So if you want to get your hands on it, write a comment down below of if you're interested, as well as write a comment of a stock you want to see analyzed, and I will cover it. So anyways, folks, that's the video on Intel. I think this is completely blown out of proportion, but you know what? Time to capitalize on this sale. So I'll see you in the next one, guys. Until next time.